Good morning. Good morning. It's Thursday,
Good
Yeah,
morning.
the
fun.
19th of March.
Good
Welcome to the
morning.
best of U.S.
NCAA
investors.
basketball tournament
Good
starting.
morning,
So
all.
Good
a lot of
morning.
people, not going to work today. Probably heading out and watching basketball all day.
That didn't start at the first of the month.
They had play-ins yesterday, and now they start the original tournament today.
Oh,
So
okay.
of 64. Yeah. So
Wow.
interesting times. Well, I'm looking forward today. Yesterday was beautiful, 79, going to be 86 today, almost 100 here in the Midwest on Saturday. Amazing. So book your trip now before the prices go up on this wonderful weather we're having here in the Midwest. So it won't last forever.
I mean, hold on. I'm going to get on my Airbnb and book
There
my
you go.
trip to Nebraska.
Absolutely. Absolutely. All right. Well, let's get rolling here. Yesterday, interesting day. Down over 1.6% in the Dow, S&P down a point and a third, Nasdaq down almost 1.5 points, Russell down over 1.5 points, and VIX today looks kind of like the same. Okay, we got Dow's down, S&P down. Of course, I've been looking at the charts for weeks now, saying, the probability is once we broke those long-term trend lines that we're going to see these break even further, and unfortunately, that's what's going on. Yesterday, we had only 22% advancers. We had a 75% decline. The amount of number of percent of stocks over their 50-day moving average is 27.8%, and over the 200 is 39.9. I mean, that is bad. I mean, that's not telling that it's a happy market out there. I mean, we even had Micron come out with earnings and just blew it away, and I think they're down 7% also. Uh, we had we started out bad yesterday. The PPI came out for February, and it was up 7/10 monthly, 3.4% annually, equals a 1.1% increase in goods. And this is even prior to the energy rise from the Iran conflict. So we haven't even begun to count that in. But the PPI is like Bob's company, what the producer price inflation is, and that's what he pushes. He might raise his prices for his customers, and then you get the CPI that goes up. So it's usually a leading indicator of what we're going to see in the CPI. Let's look over here and what's happening. Bonds are up. Look at that. The 10-year, 4.31%. I mean, that's huge. Everything's up. And so what does that do? We were talking about this morning in little group text this morning about gold. Gold went down. Well, why did gold and silver go down? You think it'd be risk off? Well, when you got higher yields, gold and silver don't yield anything. So money moves over to where the higher yields are. And that's what we're seeing, with gold going down probably. And again, it's all caused by oil. Oil's going up. Look at this Brent, $113. I think it went up to 118 in regular West Texas, 97. Natural gas. I guess Iran blew up some of Qatar's big natural gas fields or production fields, and we could see natural gas pop up. And all this, again, relates back to higher inflation. And that leads back really, to what we talked about yesterday with Powell, and I'll get to that in a second. Bitcoin's even got hit down below 70 now, so we're starting to see the beginnings of what could be contagion, in the markets as we start seeing markets go down. And remember, our margins on the stocks, the retail investors have taken out record amount of margin on their stocks and on the Mag Sevens, and as margin calls come, starts collapsing down. They got to do some selling, more selling to bring up their margin to debt, and then more selling has more selling, and it just keeps collapsing on each other. So I hope we're not into that, but right now it's kind of feeling that direction for me. Okay, let me go here. Oops, pop this up here. Right here. Okay, so I'm going to talk a little bit about Powell yesterday. I don't know. I watched that yesterday. I mean, even CNN's talking about Jerome Powell doesn't know what's going on with the economy, and that's the exact thing I got when I watched him. They held their rates steady, and they went from two more rate cuts this year to maybe one in December and maybe one in 2027. The market had priced in two rate cuts, and then you saw once he started talking, I think it went from oh my God, 400 down to 700 and some down. I mean, it just got worse and worse. Uh, he really had no answers, and I was like, really, I can't even believe I'm watching this guy. He was unconcerned about job losses. I took notes while I was inflation due to tariffs. All this inflation is due to tariffs, and he doesn't know what the effect of higher energy prices is going to do. And I'm like, really? Seemed like the press when they got done and they were mostly focused on him saying he's going to stay, until he's cleared of all his charges, and that was their big thing. Um, they what did they say? Let's see. Uh, Headline inflation. They moved to 2.7% for the year, over 2.4%, and then core inflation, 2.7 versus 2.5. And our growth is going to go up by 0.1%. Unemployment's going to hold steady at 4.4% with no weakening of the job market. And I was thinking, when he's talking, I'm like, what economy is this guy watching? It's not the one I'm watching. It's like a pipe dream. Um, he used the word uncertain 7 times in his presser. He said the words downside risk 6 times. He was uncertain about inflation. He was uncertain about the path of interest rates. He was uncertain about AI. He was uncertain about tariffs. He was uncertain about the housing market and the Iranian war. Uh, he also said we have plenty to worry about, but not stagflation. And I thought that was interesting too, because what we have is rising inflation and slowing growth. And he even said it, and that's the definition of stagflation. So I don't know if he was on drugs yesterday or what, but it was bizarre to see what he was talking about for me. And then and then he said he had some quotes, and someone was like, "The thing I really want to exercise is that nobody knows. Uh, the economic effects could be bigger." He's talking about the result of the war. The economic effects could be bigger. They could be smaller. They could be much smaller, or they could be much bigger. We just don't know. On the conflict, it's too soon to know the scope of duration of the potential effect of the economy. The future is uncertain. Well, that didn't tell us anything. This guy is the head of the Fed. I'm like, and he had no answers. And I'm like, well, why? So I went back and I looked up. He doesn't even have an economics degree. He has a degree in politics from Princeton University, a Bachelor of Arts, and he has a law degree from Georgetown. And this is the guy running our Federal Reserve. And I'm just like, you can't even give us what you think could happen. So I mean, it was just bewildering to. I don't know if any of you thought the same
I think
thing, but it was
Mark, I think it's a psychological thing. It's if he says what truly is that inflation's going up, $100 barrel oil always enters a recession, it always turns bad. If he said that, the whole market would just completely blow
but
up.
but that's his job. I mean, his job is to.
But we
I mean,
can't handle the truth. Jack Nicholson
you're
said
right.
it
You're right.
best.
But I mean,
You
we all
can't.
know it. I mean, before it even came out, I came out just in my office and talked about the producer price index and headline and core and how it affects the economy. I mean, I can come out and say these things, and everybody knows. If I know, everybody knows. We talk about it every day. With resetting the clock. We're not going to do the interest rate cuts. And boom, higher for longer. And then even after that, what's the effect of oil on inflation? I went through and determined what the effect is, because oil is not just from gasoline, it's agriculture, it's industrial logistics, healthcare, construction, the whole 9 yards. And you can calculate on 99, on $95 a barrel, the CPI will land at 3.2 to 3.5. If I can do that, that's what he should be doing. I mean, I get what you're saying, Trent. I really do. But that's his job to fix the economy and watch it, not to worry about if
Not
the market
anymore.
goes up or down, right?
Not anymore.
I guess you're
He,
right.
the
But
the
it's
idea the idea that these organizations that run our country are to tell the truth and do the right thing is it doesn't happen anymore. It
I
just
agree.
doesn't because we can't handle it. Because all these politicians live off of things being perfect. That's how they get elected. It's as simple as
Well,
that.
yeah, I mean, it was frustrating for me to watch it and think that we are such dopes that we don't know what's going on in the economy. We talk about it every day, so I know we're not dopes, on this channel. But
Right.
man, was it frustrating? I guess I wasn't the only one because even CNN Business brought it up that he really didn't know what's going on. But anyway, that's my spiel for that. And again, here's what the map looked like yesterday. Again, we're just only seeing really energy, some greens and energies, a few in utilities, not much. Okay. Some industrials, mostly defense stocks, you can see. And then a few we had, inside of some semiconductors, but mostly all red. These are all stocks one day. And then we go just to the Dow Jones, just to show you there's only one, two, two in the red, two in the green yesterday out of 30. Okay. And the Dow Jones was down 700 points, S&P. This is going to get interesting, guys, because I've been watching this and telling you about this for a while. We broke out of this upward trend. Said, basically, here's where you're going to end up. Down here at 5,600 at some point, not immediately. And here we are today. Right down on the 200 on the S&P was where we closed. We break down on that level. It's not going to be good. And we see the oscillators are down on this also. On the NASDAQ, same thing. We broke out of this long-term uh, support level, all the way back to Liberation Day. And then we've been working sideways on the NASDAQ. Again, the NASDAQ and the S&P are mostly run by the MAGs. And again, look where we are. We came down below that support level, which is now resistance, and we're knocking on the door of the 200. And this isn't good if we get below that 200 on the NASDAQ and the S&P. And unfortunately, what was the best running index was the Dow forever. We were between these channels. Then we took this break, down we went, and then yesterday we tried to, or 2 days ago, we tried to pop up. You still see those wicks, and yesterday we closed below the 200. Now, not confirmed, it can come back up, but if this goes down, comes back up, touches, and off to the races we go, that could be a bad sign. And we've been watching this for 2 3 months now, so it's not like it should be a surprise to any of us what's going on looking at these trend charts. And it wasn't for me. And again, when I see things like this makes me turn from neutral to kind of bearish, but it's got to be confirmed, and it's not there yet. Even on the RSP, the equal weight S&P 500, where every stock in there equals one, we came right back down and closed below where we've closed before, and that's not a good sign either. You look at the oscillator, so. Uh, Small caps, same thing. We got out. Small caps were doing well. If not going to lower interest rates, these small caps are going to get hit. Again, we're coming down on that 200, which we don't want to do. When you look at NVIDIA, again, right here on the 50, 1, 2, 3, 4, 5, 6 days on the 50, and that 200 is getting eerily close again to the price action. And again, not seeing much there on the biggest stock in the world with excellent earnings reports. NVIDIA, again, right here inside that channel. We've been going all the way back from July. We've been watching. And again, these moving averages are getting closer and closer and closer, and especially this 200. And the oscillators are just looking bad, just even on NVIDIA. And this is a company that's doing well and bringing in money. Okay, and it still doesn't pop. That Tesla, we've been fighting this 200, and we closed just a tad under the 200. So, we get under that and confirm, we could see Tesla be the fourth mag under the 200, and 4 out of 7. Apple, again, heading down to the 200. I'm not seeing happiness here in these charts right now. We are in definitely warning territory, especially on these mags, unless something pops and something happens. Google, probably the best one. And it's sideways. It's still above the 200 like Apple, but sideways moving on Google. So probably the cleanest shirt in the mag laundry. Then look at Amazon. There's the death cross. Kind of got this sideways wedge working on us. Now that's a little wedge, and we close right on the bottom. We break below that wedge. We're heading down even further. Here's where we were supposed to go based on this wedge here, and that's exactly where we went. So that pattern worked out the way it was supposed to. Microsoft, we're back on this line. This was a line of resistance and then support, and then resistance, and then support on Microsoft. Again, we're under the 200, and we closed under that level again. We've done it before, but the oscillators are starting to turn a little bit. You can see, and this 50 is just screaming down now. It's not good on Microsoft either, under the 200. Meta under the 200. We came right down to this level of support and resistance. We'll see if we can hold it or not. Again, you can see, long-term level of support, and then we're under it. And again, if we break that, our next level on the downside could be 581 change on Meta. Netflix, well, we couldn't get past this level of resistance. We hit it 3 or 4 times, and now we're just sideways on the Netflix. We're seeing a crossover of the MACD on the negative side. Um, XLE. So again, this is the one, probably the only clean sheet in the laundry right now is energy. As long as we're having this war, we're starting to blow up infrastructure. You're seeing it basically roll. This is the XLE right along this level of support and resistance. We popped under it a little bit, but we're still rolling up on it. If we break down, we can't get back up, like kind of what we did here. We broke down, retraced, and got back. We could see it slide down, but we're not seeing that yet. And we look inside there. Here's ExxonMobil. ExxonMobil needed to close above this level to keep going, and it did not quite close that level. It went above it, wicked up, and didn't. And that's at 159.61, is it? So if it closes above that and it comes back down and retests that, we could see ExxonMobil start to move up. Either kind of had this nice run and we did consolidation, but that's what the level I'm looking for there, where Exxon could roll. CVX is in this nice channel, still moving up. As long as it stays within this channel, you'll see that probably move up and to the right with this war going on. Valero, same kind of thing. We had this level of resistance that we couldn't get past, and we got in this channel, and we got through it, retested it, and up we went. And now we're right on the top edge of this channel. We could come back down below. That's what channels do. But Valero, even with its oscillators, looks pretty good. Energies. When you shut off 20% of the oil per day going through a straight, you start to see energy move up. Here's utilities. You can see utilities. I mean, long term, we're all the way back. A long time ago and hitting this channel. So utilities right in the middle. We're going to see some movement on utilities too. XLU, here's just a better look at that channel. Here's your 200. We're still above it and still moving within these channels. So on the lower side, we're about $44. On the higher side, we're about $51 with this channel on utilities. Within utilities, Nextera is the largest, moving sideways. And again, the oscillators don't look good on Nextera right now. You've got Constellation Energy. This one looks to be up. It's again, part of the AI trade. Came up to resistance, tried to move past it down. Again, we fought the 200 before on here, but it's picking up a little steam today, and I don't know why. Here's American Waterworks. We were watching that last week and this week. Got above that 200, wicked up right here to resistance, and then back down we go in utilities. Sometimes when the price of these go up, they overvalue themselves for a utility company, and the logarithms kick in and it starts selling. And then a lot of people go in them, obviously, for the distributions. This is materials. Materials had that nice run up. War hits, down we go in materials. Linde, gas producer and seller, kind of remaining up there a little bit with what's going on with the war. We'll see how it goes, but it's hitting resistance. CF Industries, had that spike up. These guys do fertilizer. Came back down, but it's found some support on the 9 and resistance on the intermediate resistance level. And then Air Products, same kind of thing. Double top here looks like on Air Products, but we were above the 200, came right back down to the 9, but the oscillators are turning down even on Air Products. Here's your consumer communications, I should say, services. Again, down. This one was, right along resistance. We watched it, earlier, 4 weeks ago. We saw 9 out of the 11 sectors just right on resistance, and I said, this is just bizarre. It just can't go on. And we started seeing some fall off. We basically only have utilities and energy now. On the upside, communications, we're getting dangerously close to that 200 on communications. Well, who are the biggest In the communication ETF, well, Meta. Meta's right down, fighting on the support line. Uh, Google in the communication services. Again, we watch this sideways, right on resistance. Look at that Bollinger Band is very close. I mean, we're just consolidating to the side. And Netflix is the other. These top three really run this whole ETF. And you see Netflix is now down below the 9 also. Look at consumer discretionary, okay, things that we want and don't necessarily need continue to go down. People are not spending, okay, on things that they want and not necessarily need. Within that, here's Amazon, okay, largest one in there, and you see we're down on Amazon. People aren't ordering as much on Amazon as they once were, maybe. Tesla, Tesla again fighting that 200. Maybe people aren't buying as many Teslas anymore because they're not getting the tax credits that they did at one point. Kind of the electric vehicle mandate has been taken away. You buy whatever car you want, kind of deal. Home Depot really taking a hit and was really doing well. We had a nice run up in under the 200, under the 50. Look at that 9 chasing the price action down. Luckily, we're getting close to a support level. We'll see if that can hold and maybe come back up. But again, consumer discretionary is down. Staples, consumer staples, things that we actually need to live, food, detergent, gas, those kind of things, down even on this. Walmart down. I had a big old crash yesterday below the 50. Again, here's fighting that 50, and 30% of the stocks are trading over the 50 now. I mean, these are big companies. And here's Costco down right on the 50, not quite there yet. So again, seeing these oscillators turning negative on Costco, Dollar General, even Dollar General, you would think, you'd see maybe they'd spark up a little bit, being that people would kind of downsize from going from, maybe Saks Fifth Avenue to Macy's to Nordstrom's to Walmart to Costco to Dollar General. And then they're even showing downturns. Here's your financial stocks. Of course, it kind of hit some support here. This is your, we're having issues with this private credit. It's trying to maybe get a bottom here. I don't know that we're there yet. The 9 still, screaming down. We'll see what happens. Berkshire, big old candle down below the 200 yesterday. This is kind of huge considering they have $380 billion in cash to spend when this thing hits a sale. But again, Berkshire down. J.P. Morgan kind of come down, hit some bottom here a little bit. Right on the 9. We'll watch J.P. Morgan. Let's see if maybe it's a bounce on here. Wells Fargo, again, another one that's been in trouble with the private credit, lending to private credit organizations, and it's seemed to bottom out a little bit. BlackRock actually got above the 9. If this thing would turn back up the 9, we might see a potential swing on that one. Not quite yet, but especially in these markets, I'm not even sure. I want to try it, especially in financial. Here's Blackstone. Blackstone came up, touched on the 200 and back down just over support level. But again, we're starting to see that pattern was kind of come down and do that, make the turn. Here's your healthcare, just dying on healthcare down at the lower Bollinger Band. Here's your 200 on healthcare, getting close. Lilly, like Lilly's driving it straight down. It looks exactly like the XLV. You've got Merck. Merck's doing okay, but it just closed under the 50. Again, another one bites the dust on the 50. We'll see if it can move back over, but it looks like a death cross of the 9 and the 20 over the 50 for sure. Then you got Medtronic within there. And this is one that's come down and probably maybe hit the bottom. We'll see if this one starts to swing up. But once the tide goes out, it takes a lot of these stocks down with it, whether they're good or bad companies. Here's the XLK. Just sideways. Look how close this 200 is coming up, and we're just, the 9's rolling down. We've tried to get above this resistance level, wick. So we're trying to buy, and it just keeps selling into that on technology. Apple's the biggest one in here, and Nvidia, and look, Apple almost to the 200 on Apple. Look at these oscillators are still down and to the right. Micron, okay, yesterday, you saw the buying into people bought into the earnings. Earnings came out, really good earnings, and now we're down 7%. We'll see if it pops today. But again, we tried yesterday, just kind of a candle of indecision, but a lot of volume for that candle on Micron. Microsoft, again, right along support, just sitting, doing nothing. And again, these mags are what run the indices, and when they go down, the indices are going to go down. Broadcom fighting the 200 down, came back, retested it. That's not what we want to see, and came back down. We'll see if it continues down on Broadcom. XLI Industrials, very good. We watched this go up, and it was fun to be a part of it, and then drop it down. And we're under the 50. The 9 death crossed here. The 20 looks like it's going to death cross today. And again, on industrials, Caterpillar being one of the largest ones, still hasn't dropped below the 50, but it's fighting it. 4 or 5 times, 6, 7 times. The more you hit that, the weaker it gets, and we'll see if it drops. General Electric, aerospace, same kind of thing. And this is all industrials. Illinois Tool Works, a big industrial, just down almost to the 200. Again, we're under the 50. Look at that 9 just screaming down. I wish I had better news. Here's Union Pacific Railroads. We're all the way down to the point that they've actually moved the intermediate resistance level from where it was up here all the way down to where we are now, and indicating we're going to go further down on Union Pacific. Real estate, of course, down below the 50. If they're not going to lower rates, it's going to hurt real estate, and it's kind of the way it's been looking, or anticipating it looks like over the last several days. Welltower, the largest in the real estate, tried to get up, came back down, just like what we've been seeing as a pattern lately. Prologis right up on resistance, but again, just kind of rounding top, moving down. Oscillators don't look good at all. Uh, Semiconductors under the 50 on semiconductors. Amazing, huh? That means a hot sector. Got TSM under the 50. Again, not good. ASML dropped under the 50. Not that it's a bad company, but this is the markets we're in. Intel under the 50. Okay, oscillators moving down. Transportations stocks. We looked at some of these. Again, transportations came down and bounced off the 50, came back down a little bit yesterday. Look at Uber. Uber had that nice, they're going to do all this robo taxi, and had a injection from NVIDIA or whatever. That got to the 50 and couldn't get past the 50 even with that news. Airlines kind of popped back up over the 50. Here's Delta Airlines. We'll see if that can maintain. Jet fuel is definitely going to go up on that. So again, I'm looking at these charts, and I'm not trying to be the bearer of bad news, but we've been watching them, and I've been showing that the charts in the market or market conditions are unstable. They have been for a while. Charts have been showing us that long term. If we, be watching it, you wouldn't be buying into some of this. There are some stocks that'll roll up, but as the market in general is not showing us resiliency here. Let me show you Bitcoin while we're here, and its a little drop. You see here we are in Bitcoin. Again, we're fighting the 50. We've been hitting this 50, and we're in downward trend. We did come up. We didn't get in here into this next level. We hit this resistance, 71, 70 or 73, 74. Down we went. Now we're right on the 250. We don't want to break that, but the oscillators look like we're going to break. And then our next level down would be 65,000 if that continues on Bitcoin. So again, I'm not trying to be negative. I'm more neutral on the market, but as I see our indices and all these stocks cross below their 50s and getting close to their 200s, and when you have what is it, 39.9%, only 40% of your stocks are above the 200. That's not a bullish market in my estimation. And so I'm just going to sit on the sideline. I'm going to wait until I get the opportunity, and we see it turn one way or the other to go bullish or bearish, and then I might pop in and try to write it. So that's where I'm at, Trent. How about you?
Well, I think, let's see here. So let's hit on the video because Micron came out with earnings. You would think blowing it out of the water, they should go up and bring everything else up. It isn't, which tells me more and more that this market or the AI trade is not. It's not about the AI trade. It's about more economic over leveraged environment, and we've had a nice run in this area. Let me take the volume out of here so we get some clarity here. Right now, I've got calculations of a low end about 176 On Nvidia, looks to open at 178 today. So that's 176 is today's projections for where it could get to today. Option market, its largest support level is 170. This is where market makers have put in a hedging at 170. So as it gets closer, the stock price gets closer to 170. Those values of those hedges go up and offset any losses that they have that are being occurred because they own the stock. So 170 is another level. But I want to just take a look at real quick where we've come from. We broke out here in the video in June, say just the end of May, 1st of June of 2025. We made this major run up. Let's take a look at how big that run up is. And sorry, Dennis, don't mean to make you squirm or anything. So we closed out, we had a 50% rise from here June 27th to here November 3rd of 2025. And what we should anticipate technically is anywhere between a 30 and 50% retracement of that. So what would that be? So if I start here, 30% would be right roughly right there. So 145. It doesn't make much sense, does it? No, it doesn't. What is that? Let's see here. 139, say 140 to 208. So that is 58 divided by 2. Let's work out the math here. We'll get an idea. 8, 2, 29. So minus 29 from 208. And should be, well, 179 would be a 50% retracement, but looks like we're going to go lower than that. I guess the point is I have here is this has been clustering for a long time. It's pulling back. We're going to probably see 176 today at some point. We break through that, 170 is the next spot. But what is fueling this move is the bigger question. And I think it is this deleveraging element that is coming into play. You can see it here in gold. Gold's this one here to the left, silver to the right, US dollar. Dollar has strengthened. Gold and silver have all started to retrace. Just look at the movement in gold alone. So if I go back to 2025, where did it start picking up here? We had started here in February of 24, around 2,100 an ounce. Hit a plateau here from April of 25 through August of 25, then took off again. These kind of moves, we should anticipate a retracement in all of these. We're seeing RSI in this case is below 31, or it's at 31 right now. I would not be surprised if gold gets back down here towards the 200, around 4,000 an ounce. Remember, these are trades. These are institutions make money by stocks going up and again then capitalizing on them going down. And so we're seeing that here in gold. We see that in silver as well. Same scenario. Took off right here, basically accumulated from October of 25 through December of 25, and then it just took off at the first of the year. Now it's retracing. Will we see, is this the bottom? I don't think so. I think we'll get closer to the 200, around 56 on silver, and that could be a great buying opportunity. Your RSI would be below 30. That would be oversold. Gold, same way, oversold below 30. So just keep an eye on this. And I think it's when you start to see these hockey stick moves, you get this dramatic move like this, anticipate you'll see a pullback, a sellback. Um, the VIX, we're back into the F bucket again. This is where bad things happen. We're above 27 this morning. Yesterday we moved 12% up to close out at 2508. This morning, pre-market, we're already up 9.25%. We're in a very choppy, volatile market, and this should just be a signal to you that, hey, nothing is, there is something majorly wrong. There's something going on. What is it? Is it Nvidia having, are they fundamentally broken? No. So take that off the table. Is Micron fundamentally broken? No. They're selling more chips. There's more demand, this, that, and the other. This is a bigger macro picture. And I believe what we're seeing is a major deleveraging. Something is underneath the surface that we don't know anything about, just like we saw during the great financial crisis, the dot-com boom bust. Everything gets super overvalued, things will retrace. When we're super leveraged, which we are in the world right now, things eventually retrace and you get a reset. And I think that's where we're at. Now, reset is a kind word. One other chart I want to show you that I think is very significant is oil. When oil deviates about 50% from its mean on the upside, we enter a recession historically. We can go all the way back to the 70s, 75, 80, to 1999, 1990, excuse me, 2000, was a roughly 2008 to 2010. And look at where we are now. Or excuse me, 2020. Where's oil today? It's breaching that $100 mark. It's deviated more than 50%. So we're now economically, the more and more it costs us to fuel our cars, to fuel our homes, to fly, to travel, the less and less we're going to go out and do it because it's costing us more. The cost of living is going up. Oil is a prime example of when it deviates 50% more than its mean, its average. Remember that whole thing, reversion to the mean. We get corrections in the market.
It's not just gasoline either. I mean, petroleum I put in the chat yesterday in my office is responsible for a lot of products, tires, asphalt, jewel or
The cost of your frosted flakes.
yeah, clothing, fibers. I mean, it's everything's going to go up if it stays
Yeah,
up.
and so this is where you go, okay, where is the safe haven? Now, my concern is, we have a rotation out of gold, silver into treasuries possibly because it actually pays something. But when 10-year treasury gets over 4.40%, that's when things get really nasty. Okay. And yes, if once something breaks over here, there will be a rush to safety, and U.S. Treasury has historically been a safe haven. That to me is the positioning, where you position yourself. So you're sitting now, you recognize this high beta stocks are starting to retreat, they're starting to break down. I mean, hell, when you have great earnings and you great fundamentals and a great demand, yet they fall apart the next day, it tells you something's bigger is happening. So, dry powder, cash on hand, to honestly, I think what the trade will be, and I mean, when I think trades more than 62 days in a period of time, it's going to be U.S. Treasuries. Where once we see 10-year go over 4.4%, once we see that yield go up, to me, then that's the place to start entering. That look at
That's the that's
TLT.
that's the canary in the coal mine, man. Is the treasury
Right.
market. Yeah.
Exactly. And so when you see those yields go up, remember the bond values go down. It's like a teeter-totter. They go opposite directions. TLT, IEF, those could be your good trades, longer term trades, and your safety plays. And I would not be surprised in the next 3 months if we see those yields get over 4.4 on the 10 year, get up high range, and we start to see capitulation in like the TLTs and IEFs at the very bottom. That should be your sign. Chances are we're going to see a rotation back into treasuries.
I've
TLT
already seen it.
IEF is going to move higher, and that's where you're going to make your money. And I
Put up
think
the 10 year.
that's,
Put up the 10-year Treasury, Trent, and just look at that chart. Do you have it?
yeah, I do. Here we go. If you have to be in the market, I know somebody made the comment, I don't trade bonds. Well, the smartest money in the world trades bonds. So follow the lead. You know, when we see a break right around this area, 4.4 on the 10-year treasury, if we see that move higher right there, you're starting to see some really interesting things starting to happen.
Just look at the
So,
move since March. We have that low down there, Trent. I mean, what is
oh,
that? Like, yeah, look at that low
March
right there
of
on the no on the right. Just this
right
from
there.
yeah. I mean, look at the move there. It's 3.9, and we're up to
Yep.
4.3. Is that where we're at now?
Yeah, 4.3 right
Wow,
now.
that is a huge move in a treasury.
Yeah,
The other part of that, Trent, the bad side of that. I mean, it's good for an investor if you're going to make more yield. On the bad side, the U.S. debt is at 39 trillion, and they as that goes up, it's going to make our debt payment even worse.
exactly. And as
We
they
got
issue more,
$9 trillion worth of debt coming off the books and having to be refinanced this year.
yeah, and the market will push this yield higher because they want to get paid for the risk they're taking. Remember that. You pay a higher yield based on the level of credit quality you have. So if the United States continues to accumulate a bigger debt load, 39 trillion, 40 trillion, the market's going to say you're going to pay us more. So you're going to have to inch your yield up when you auction these things off for our risk that we're taking. So I would not be surprised if we see 4.4 in the very near future. If I go back in time here, this is 2016. Well, here, just look here. 2017, you went from 2.8, 2.3% to 3.2%. That's a sizable move in yields. If I go back, let's see. This was the trade right here. Uh, 78, you're at 8.2. Yields went to 5 point or 15. If you bought them there, bonds eventually went down to point or 0.5% in 2020. If you had that 30-year treasury, you made a ton of money. So think of bonds as a potential, it's a slow one, but it could be a very, very profitable place to put money. Um, just watch that oil trade. Watch oil as oil goes over 100 and stays over 100. If the price tags of 200 that I've seen on recently talked about, um, we're gonna be in a deep recession, and you're gonna be looking for a place to park money. If we see yields go higher, it's gonna be your opportunity because eventually money will flow to the least risky, most value oriented asset, and bonds could easily be that. So
That's it. Yeah, that's it. I'm having a little discussion with Julie. She wants to know about manipulation because the government wants to keep those bond low, but they can't. They don't control the bond market. The bond market's its own entity. They might control the lower ends, okay, with treasuries and T-bills and the Fed, with the banking rate. But on the long term, long bonds, the 10s, 20s, the 30s, if you're not, if the market out there says, look, you're at 39 trillion, I'm not buying a bond for 30 or 10 years because I don't believe you're going to be, solvent back in 10 years. You're going to have to raise your rates. You know, your
yeah,
yields to get people to take that risk. And that's the way it is.
look at high yield debt. Was it HYG?
Yeah, HYG.
Um, hold on, something happened there. Let's see here. Share a chart here. HYG, where is it? Come here.
This is junk, right?
This is junk. This is
Yeah.
what Michael Milken made millions of dollars and went to prison for, um, is high yield debt. If you bought, so high yield debt, and this is HYG, this is the ETF, so it gives you a picture of what it looks like. In '07, it was trading at 103. If you came down here and when the market bottomed, roughly, let's just say March of 2009, and bought HYG at 67, you rode that up here till, let's just say, April of 11, you're up 92. So roughly a, what's it, 50% move higher. We're seeing high yield debt fall again. If it gets down in this range again, high yield debt could be that opportunity trade. Um, it's something, we don't think of bonds as big money movers, but when we get extreme movements in the macroeconomic environment, they become very powerful ways to make money. And so look at your treasuries, look at your high yield debt. When treasuries go to the peak, high yield debt will go to the low. It'll sell off. You'll see this rotation potentially in these things. So just keep an eye on it. Keep your mind open to potential ideas. I watched a movie last night with Ginger, and it's about a man who got just fixated on one belief, and it ended up basically costing millions and millions of people their lives. But it just reiterated to me, we can, as human beings, can get fixated on an idea, and we have a real hard time letting go of it. And when we can't let go of it, it can cost us a lot, or cost the people around us a lot. And that's why I believe when it comes to the stock market, you have to take a stoic, non-emotional approach. You are always looking to add alpha to your portfolio over your average. You want to look to where money is flowing. And right now, money is flowing out of equities, out of high risk stuff like technology, and it's looking for a place to go. And so look for where that place will be. All right, let's open it
I
up
tell
for
you,
questions.
I'm in CDs and I'm in monthly CDs and treasuries and a few other income things right now, and a lot of cash. So I've been saying 50 to
Trent, it'll be
60%.
easier if you tell us where this flow of money will go next, so we can just go.
Well, that would be, I'm saying cash. I don't know that it's going right now. Money's going to cash. It's going to treasuries.
Yeah.
Uh,
Well,
It's
I don't
not,
even know if it's going to
I'm
treasuries
worried
because you're
we
seeing
can't
yields
handle it.
move higher. So
well,
if
people
yields
are,
are moving higher,
no,
then the values of those bonds are going down.
right. So I'm buying at a higher yield. So instead of getting 3%, I'm getting 4% or whatever,
Right.
as
But if you're
as an
going,
investor.
if you're dollar cost averaging in, yes, yes.
But I
And if
do it
it,
monthly. I'm on T-bills and I'm monthly CDs. So I just do it short term, keep that money rolling and just waiting.
yeah.
I mean, there's
Um,
nothing, there's nothing on my screen right now that says screaming buy for any kind of security at this point, except oil. If you want to, it's very risky, but you got ExxonMobil, you got Chevron, you got ConocoPhillips, all up today. Okay. When I look at
Yeah,
the
it's
mags,
really
all
boring
down,
out
all
there.
down, all down. Um, the silver's down, gold's down big time. Tesla's down, Nvidia's down, Amazon's down, Q's are down, Meta's down. Uh, this. I'm not. Again, you don't always have to be in the market, is my philosophy, because especially on days like today. I mean, the Dow is down three-quarters of a point just in pre-market with 9 minutes till open. The Nasdaq's
mhm.
down almost a full percentage again, and the S&P is down 0.83%. Now, again, it's how it closes, not how it opens. But from what I'm seeing on these charts, and I've been saying it for weeks, it's the probability is we're heading lower until we're not, and that's the trend is your friend and until the end, and whether the trend is up or
Yeah,
down, the
Ryan.
trend in my idea is down.
Yeah.
I
I
mean,
mean, oh, let me show TLT real quick. Where is it? Share. Here you go. This is TLT. This is the 20-year U.S. Treasury ETF. And basically, it's found a support level right around, let's just say $85 a share, 86. And it just keeps bouncing around. This is a monthly chart of it, monthly. So if I look at it from a weekly, you can see it even more. There it is, just basically sitting sideways. So as 20-year and 30-year treasury yields go up, this TLT goes the opposite direction because it owns the bond value. And that's what it's calculated on. So when the yields go down, they go up. So if I want to look at a shorter term one, IEF, this is the 7 to 10 year. Look at what it's been doing, just sideways. This is a weekly chart. We go back to September of 22. You have done nothing, made money, no money in this ETF right now. We're sitting just at the 200. We're intermediate trend is starting to move into the 200 or through it potentially. But this, to me, I look at this and I go, this is a Michael Burry kind of situation. He's back here, he sees this happening, and he starts to accumulate. Okay. If I go back even further, back here till 2002 when this happened, here in 07, you saw this breakout of IEF, and they rode it all the way into 2020. Okay, that's a nice size move from, was that 80, say 86 to its peak in August of 20 at 22. Now once again, we got this sort of building period from November of 22 to today. And this is what at one time was resistance back here in 09, broke through. Now we're sitting right there again. So I'm not saying this is a swing trade. I'm not saying this is a safe haven trade. This is where money goes when it gets spooked. IEF is your 7 to 10 year, and then your TLT is your 20 plus year. So just make sure you keep that in mind because duration is very important. And you see that all the way back in here. I mean, if you could have entered this back in 08, you had a major spike in December of 08, came back down, but then it took off. It basically found support, capitulation in this area, accumulation here, and then it took off in 11. You just rode it up. Even if you got out at the peaks, bought back down on the dips. I mean, this is what the big macro thinkers do. This is what the Ray Dalios do. They position for these major macro events and changes. And I think that's where we're at today.
Well, and
Yeah.
it's not like we haven't been saying it. We've been watching the institutions for, 15 out of 17 weeks sell into the buy the dip. And we've been saying it every week. And we've also shown where the insiders of all these mag companies have been selling constantly over the last 6 months and not buying.
Yeah.
So I mean, you look for those things and say, okay, why are they doing it? And everyone's like, oh, they got to go to a better investment. Well, what's a better investment than Nvidia stock? If you're an Nvidia shareholder, where are you going to
Yeah.
go? What you're doing is they know what's coming,
Yeah.
and so
It's
it's not like we haven't seen these things, Trent. We've been
we
outlining them
have,
for a long
but
time.
you got to admit it's hard. It's
Oh,
hard
it
to
is.
go against something that's worked for you for a long time, right? It's like Ginger and I had this conversation yesterday after the show. She had a great day yesterday, by the way. She's doing way better than most because she does a lot of custom. She's willing to do custom stuff. But we were talking about it, and I mentioned the whole oil thing to her and about oil being over a certain price. We in a recession. And she was talking about somebody else who's an artist, and they're not selling anything. And the stuff they're selling like, 50% off what they typically would sell it at just to pay the bills. And I made the
Yeah.
comment, I was like, this is a period of time where you put your pride away and you go, I need to make a living. And Adjusting prices is her action today, bringing her prices below a certain threshold because that's where people are, to be honest, on big paintings and stuff, $1,000 is like that level. She's usually in the $2,000 to $5,000 range, right? And it's like, do you want to eat tomorrow, or do you want to go get a job? you know, and it's want to eat, so you adjust and you lower your prices, and that's what we're seeing. I'm seeing here in Round Top, and I think we're going to see it more. The lower price stuff, the consumer is just straining to make the bills right now, and I think we need to adjust as well to that. So,
I think
uh,
that really we're correlated. And Trent, you brought the oil chart up. If oil keeps going up, that's just going to tank the market. And that's because it's a huge tax on people that go fill up their car every day and buy products that are made from oil. If something happens and oil actually could come back down, then you'll see the markets come back. I think it's just that simple with what we're seeing. And the trigger,
mhm.
that's the trigger, is oil, in my opinion. Dennis, what do you got?
You're on
Are you there,
mute.
Dennis? He's on mute. Dennis, you see his hands up. Dennis, are you there? Well, hopefully.
It's
Oh, there he is.
super. Yeah, I'm here. I
Okay.
guess I'm not being heard. Can you hear me now?
Yeah,
Yeah.
you had your mute on, but now you're good.
Yeah, either that. I think I clicked it, but I'm kind of like the government. I clicked in my mind, but probably didn't click in reality. Um, Guys, I just want to make a quick point. Not that it matters, but I think this is bizarre. Trent, you're maybe three-level macro ahead of me or above me. Looking at the economy, look at the global situation, which I do, but I can't ignore the micro. And to me, if I were going to bet, pick a number, $10,000 on one stock, it's always going on Nvidia. And I just read something, was it last night? I think it was this morning, I don't know, 4 o'clock or something, reading about, you know, the basic premise that I had, and I think one of you saw this, is people don't even understand the difference between ASICs and programmables. How do I expect them to understand the difference between total cost of ownership and what they're doing? To say that ASICs, which are fixed, are the same as programmables, it's like saying, well, if I buy 3 sheets of paper instead of a chalkboard, look how much money I save. I got to throw the paper away 25 times a day. That's okay. But initially, it only cost me 3 cents. Or it's absurd. And yet they're so myopic. Nobody in history has come close to these last 16 quarters that NVIDIA's had, and they completely ignore it. I even saw Mark, our favorite analyst, somebody actually raised it. Or from 125 to 128.50 on a bank. I was really impressed with that. Yeah. Yeah. It went from yellow finger polish to red, and that made the fingers more valuable. I don't know. But anyway, I think the NVIDIA paradox is so compelling to me. And the only question I have for myself is, am I going to buy shares or am I going to buy some calls? Because the calls might do it. If we get a pop, I could make 12, 15, $18,000. That's wonderful for a few days. But if I have the shares, I can make it for the next 4 years. And I think I'm leaning toward buying shares, but it's not quite as low as it's going to go yet. I need about 9, 10 points a share. And then if it goes back up to the 350 range or the 325 range, then I'm going to use Trent's Realtor. I'm going to find an island to buy.
I think you're going to find an island to buy at 50% off price here in the next year.
Yeah,
Uh,
I think Epstein's Island's for sale, isn't
yeah, I think so. Yeah.
it's it's got
um,
it's got a lot of jumpsuits in there though.
it? Definitely.
let's
All
not
right,
go there,
guys. I
folks.
just wanted to chime
Yeah,
in.
thanks,
I haven't
Dennis.
lost conviction.
Yeah.
I
Yeah,
think it's
no, I get it. I get it, Dennis.
historically, Mark, if you look at the lowest decile, the lowest 10% that NVIDIA's ever traded at, it's right there. It's about 11th percentile. And
No,
all they do is
I,
make money. That's
I don't
okay.
I don't disagree. I mean, I've said, look, So the market is not logical, Dennis, as we see.
You
Well,
know
I think
what?
it is. It's actually very logical. I think honestly, I think it is. And the reason is because it's looking at a bigger picture than just one focal point. If you look at the world in general, and Mark, you pointed out you paid probably what 60, 70 cents more for gas over the weekend or the other day.
Yeah,
Um,
from 2 weeks ago. Yeah.
yeah, and if you drive 40 minutes or an hour to work every day, which I know a lot of people do, that adds up. That
Yep.
chips away. So that's a variable that we have to take into account. You look at the fact that we've got a war going on. Somebody pointed out the other day, we got three of them going on. What does
Well, we
that
got a hat trick,
mean?
right? We
What's
got a
that?
hat trick. Three at the
Yeah,
same time,
it's
and Cuba is on deck. We got a
right.
possible four pack.
I mean, honestly, there's just so many of these other things happening. Jobs, number of job openings is increasing. Unemployment, if you probably looked at real unemployment, it's probably astronomical or getting
Well,
there.
it's probably
And I think those
8%
are
when
things you
you
got
look
to
at
figure into this mix.
yeah,
Yeah,
U6 is 8%, I think. That's the real unemployment rate.
Yeah. And so when I look at opportunity in NVIDIA, I look at this as this is going to present an incredible opportunity to buy it at a cheaper price. And
if you
that's where I
have the
look at the
time horizon.
optimistic side of it.
Yeah, if you have the time horizon. The one that you said at the end is the one that concerns me the most.
What's that?
Joe Smith, he's been going to work for 15 years. He may pay a little more in gasoline, and that hurts the people that are really tight. But Joe Smith doesn't know if he's going to be working a month from now.
That's
That's
How
true.
is
true.
he going to spend, Trent, if he's
He's
not employed?
He's
he's
not.
not. And
He's not.
he's probably in debt up to
That's
his
my
hiney
macro
too.
concern is who in
Yeah.
the heck, I've been doing a lot of AI work, and AI is predicting 40% of the white collar jobs that exist today could be gone by 2028, January 2028. That's not very long. It's a year and a half.
I don't know about that because I think that the majority of businesses in the United States is small businesses and the adoption rate on that is slow. So it could be more like 30-30, or 20-30. I don't know. When you see these, white collar jobs are going to get wiped out, I'm like, no. I mean, that's an extreme move, but I do think they're being affected.
Well,
For
we
sure. We hear more about the blocks laying off 40%, 4,000 people. We hear about the Amazons. Is your local small business laying people off? That would be more of my question.
what they've done, at least what I in my teeny weeny weeny circle, what I've heard is that a lot of people are cutting back. For example, um, they've hired a young person. That young person, expected to work 40 to 48 hours. Now they're telling the person, we want you around, but we can't pay you for more than 30 or 32. And then the person has to worry about, I got to have at least 30, depending on the company, but 32 to 36 just to keep my benefits. And that's a big springboard. That's almost as big a problem as not having a job, period, because you just people are scrambling about health insurance, which is a major problem. Anyway, I don't want to
Trent
take
and I
any
know
more of anybody's time.
Trent and
I've
I know
spent
that Trent and I know that well. If you work for yourself, you know that well about
Yeah.
healthcare,
I
insurance,
mean,
all that stuff.
we
Bill,
opted out of it this year because
Bill,
it was
yeah, you did.
30K.
Yep,
And it's like, okay, I'll just build a cash reserve and eat less
fatty stuff.
KFC. There you go.
Yep.
Hey,
Hopefully,
Bill.
hopefully a truck doesn't hit you or something.
Well, if a
or a
truck hits
tractor,
me,
Mark.
that's
Or
what life
tractor.
insurance is about.
Yeah.
Hey,
Bill, what do
Hey,
you
everybody have
Bill,
a
got?
what
great
you got?
What you got, Bill?
Well, I got a question. We had scorecard. Where is it now, or is it gone, or what?
No, it's there. It's on when you log into the website, the new website. It's on. It just says scorecard in the menu bar. Um, Let me see if I can bring it up real quick for you, Bill. Let's see here. Okay, share. Go. Okay. So when you log in, scorecard is right here.
Hey, where?
See this? Can you see this?
I can see that. I don't see the scorecard.
It's right next to stock analyzer. It is 1, 2, 3, 4, 5, 6 down right there. And you just enter your symbol, hit report, and it generates a report for you. Can you see that, Bill?
1, 2, 3, 4, 5 across the board.
Yeah, it's the sixth one.
And
Yep.
I got join Morning Edge, join Friday, Discord. I've got
No, go down.
Kerry's, and then I've got managing members.
No,
Go
just
down one line.
Huh?
if you go down one more layer, so you go down from join Zoom and go straight down, you'll hit the scorecard. Can you see that, Mark?
Yeah, I can.
Okay.
Bill, can you see what Trent's doing on the screen?
No, I don't.
You don't see that? What are you looking at, Bill?
I got what you're showing me. Welcome, Trent, etc.
Yeah, so go from the W in welcome, go straight down. You should be able to see scorecard right there.
All those little tiny things.
Yeah, those little tiny things right
Those little
there.
tiny things.
Right there.
Okay. Very good. Thank you. That's
There
right.
you go.
All right, I'm glad we answered that
Dave,
question.
Dave Hill has his hand up. What do you got, Dave? Unmute yourself. There he is. Hi, Dave.
How you doing? I'm just wondering how you got to that page. I guess because I somewhere I missed the email or something. I don't have the link to it.
Okay, so that's you go into okay, let me go here. We some people are having some issues with actually seeing getting into the website. You go to Best of US Investors, go to member portal up here in the right hand corner. You click that. If you've signed in once before, you will automatically sign in for the next 30 days. You don't need to enter a new code or anything like that. So you should go there. So it's just really that simple. Now, if you hit member portal and haven't logged into the new website, this is the process. We have eliminated the password scenario because of security reasons. So what happens is you click member portal, and let me just see if I can get out of it here. Let's refresh it real quick. All right, so I hit member portal. I go to member login. I hit sign in, and I get a. If I've signed in before, I can use what is called shop, and I click that. It's got my email in there. I hit shop, and it automatically logs me in. If you haven't logged in yet, you'll enter your email address that you've signed up with, because that's what we have. That's how we're determining if it's you or not. And it will then send you a 6-digit code. You'll have a little window that says enter that 6-digit code here. You enter that code, and that will log you in. We did this because a lot of the big websites are going to a code-driven type thing like what we're doing. That code will renew every 30 days. So you'll have to do that process again. But between that now and that 30 days, you don't have to enter a password. You should just go hit member portal and it'll take you to the front page there. So I know some people have had some issues where it doesn't come up. Hopefully we've fixed some of it. But if you do, just shoot me a
Yeah, it's not
drop something in
working
my.
for me.
What's
I
that?
can't log in.
You're
It
still
gave me
having
the
problems?
code, but it does not have where to put the code. It's not coming in right.
Do you have a pop-up blocker or anything like that?
Not that I know of.
Okay. Um, you're on the Discord, right?
Yeah, I'll talk to you later. Don't worry.
Yeah, just shoot me a message. And I'll see what I can do to help you get in. We've had a handful of people are having the same issue, and I'm trying to figure out what the link is, so what the problem is across the board. So, all right, we'll wrap it up there. I've gotta go do laundry today. Today's laundry day. Driving into Gibbings, Texas, big town there. We'll see how the economy is there at the laundromat. So, y'all have a great day. Thank you once again for all you do and for participating. And if you do have questions about the website or you have trouble finding something or getting in, please let me know, and we'll see what we can do to fix this problem. All right. Thank you so much. Y'all take care. Live loud.
Live loud.
Peace. See you later, Mark.
Bye, Manny.
Take care. Bye.
See you guys.